India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Monday morning, kicking off a fresh new week with, not trepidation, maybe a little bit of optimism, but not too much. It's a bit thunder, globally speaking as well. Will markets throw us a surprise is the question. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, guys. I would add the word hope. It's always good to start the week with some hope. It may not be a data point, but still a very good thing to sort of have on with us. So let's see if the consolidation, this range-bound trade that we've seen on the indices, whether that's behind us or if we'll see more of that ahead.
Well, indeed. Let's get straight to the action then, Prashant.
Absolutely. And I think we have to not go back to Friday, but go back to Saturday because I think China
another
is
China
still...
meeting.
China has been top of mind, right, for the last many weeks and this week as well, at least today. Because on Saturday, there was that China Ministry of Finance meeting. Then it was followed by a press conference. And basically, that press conference and the meeting have confirmed the broad elements of a fiscal package. So headline is, it's kind of in line with expectations. Broadly, it's in line with expectations. We were talking about this towards the end, last hour on closing bell on Friday, that don't expect a big headline number because they can't do it before the NPC, the National People's Congress meeting towards the end of this month. They've got to sign off and then it can be announced. So in that sense, this was largely in line with expectations. Total size, details in terms of the fiscal stimulus is still unclear. But the suggestion was that the granular details will eventually follow. Remember, the HSCI, which is the China Enterprises Index, which trades in Hong Kong, that was down 6.5% last week. It was the worst week for that index, for China offshore stocks in 18 months. So a lot of that sort of, excitement and that violent pullback on the way up that we saw the prior week, not the last one, but the week before, that corrected because markets cooled off last week. And that's the reason why I think at the margin, even though there is no big headline number as such, it's kind of kept hopes alive. They managed to keep hopes alive that, we are interested in stimulating the economy. There perhaps will be a fiscal package of some shape and form, which you should expect in the future. And markets, of course, live in anticipation of what may come next. And in that sense, authorities have managed to do that. So I think, that's the plus. You could obviously look at it, and lots of people will, that it was a bit underwhelming and there was no big number and all of that will be true. But I would say at the margin where we are, they've managed to keep those hopes up. Now, S&P 500, the US market, no problems at all. It closed at new all-time highs. On Friday, the S&P 500 was up 0.61%. Yields were flat. Dollar index, not very much by way of change. Oil prices, so I'm not spending too much time, all largely unchanged. US bond markets are closed for Columbus Day holiday tonight, but exchanges will be open. And just a word, we are 24 days away from US elections, the US presidential elections. And if you notice some of the betting markets, etc., Trump seems to be ahead once again, right? And that's interesting. So we'll talk more about this as well as we go along. Just to tie in the levels, etc., for the market, for the Nifty, it's the same level. At least the indicator is the same. The near-term resistance is 25,090, which is the 40-hourly exponential moving average. 2 days in a row. Actually, Thursday, we almost got to it within a few points and then sold off from there. Friday, of course, no such luck. And beyond that, the upside targets are essentially retracements from the all-time highs. 25,485, which is the 50% retracement, and 25,672, which is the 61.8% retracement of the fall. Nifty Bank on Friday ended lower. It failed to break above the 40-hourly exponential. That's the Bank Nifty. It needs to close above the 40-hourly, which is 51,454, very close by to where we left off. We closed off almost at about 51,200 on Friday. And beyond that, you're looking at the 50 and the 61.8% retracement, which is 52,330 and 52,835. So at least the day on day, because the numbers have changed around, moved around a little bit. But largely, I mean, those indicators we are watching remain the same. A slightly flattish kind of Q is what we've been handed off as we begin another session. 20 points higher on the GIFT Nifty is what we're looking at. Surabhi.
Well, Prashant, absolutely. I mean, it was a bit of a damn squib once again, right? Because that major headline that you would expect that did not come through from China, and markets in the neighborhood are reacting to that. Yes, they've told us that, they've told global markets, literally, not just us, that more stimulus is on the way. But the wait and watch game continues. So the Hong Kong market is, cooling off, down about 2% as we speak. Even the mainland China market is doing absolutely nothing. It's absolutely flat right now. Just to quote that line, what the Chinese finance minister did say, because markets were holding on to every single word, he said the government has a rather large space to increase the deficit, but it's still under discussion. So he didn't give out any specifics in terms of numbers or timelines or size. The market's working with anything between 2 trillion yuan going all the way up to 10 trillion yuan. So let's see when we get the specifics. By the way, we've got inflation data out of China over the weekend as well. And the deflationary pressures are quite real because at the PPI level, there's a contraction. Inflation has actually fallen almost 3%. And even at the consumer level, the number that came in 0.4% for September, that was below street estimates. So inflation clearly isn't a problem. They can keep stimulating the economy. The question is, what will they do on the fiscal side? One good news actually for us is Brent has cooled off because the fact that China did not announce anything absolutely phenomenal led to some cool off in markets ahead as well. And this morning we're seeing a sharp sell-off on oil prices. So that's a positive cue for us. So 1.5% down on Brent. Speaking of macros, let's now come back home and look at the cues that we are working with. Not very good headlines coming in on IIP. It's the first time that we've seen the index go into contraction territory of no growth. It's actually down in first time in 21 months. So there is a monsoon impact that's playing out. There is a base effect that's playing out, which is why the numbers have been very, very subdued. There's contraction in the electricity output, in the mining output. Manufacturing has hardly grown. The sector that's done the best actually is capital goods within IIP. So that is about 5% growth on the IIP index. But again, if you're looking at the overall picture on a rolling basis since the start of the year, so year to date, 5 months, IIP is up 4.2%, which is a lot lower than the same period last year, up to August last year, where we were ahead at about 6%. So anyway, I mean, let's watch for these numbers. Very quickly, here we spent the entire last week in a range. The large cap indices didn't do too much. There was consolidation, Nifty down 0.2%. Mid caps were relatively better off. Let's see if this trend is going to continue and whether that large cap selling, FPI selling, will finally start winding down. Because even Friday's number, that brings me to the flows picture, the Friday number was still a net sell of about 4,150 odd crores, but the extent of selling has been coming down. Remember, 15,000 crores, 10,000 crores, 8,000 crores, 9,000 crores. Now it's kind of coming down, so that's what the bulls will want to hold on to. And of course, domestic institutions were buyers in the market once again. A couple of stocks are going to be in focus. D-Mart, watch out for this one. Manglam will tell us because the company is really acknowledging what quick commerce is doing to a part of its business. The EBITDA numbers are suffering. The margin is less than expected. So this is a big one to watch out for today. HAL has become a Maharatna. Wipro is considering a buyback. Sudarshan Chemicals, we all remember the move when the big global acquisition was announced on Friday. So let's see if there's any follow-through. Some interesting stocks to keep on the radar. And then, hey, it's results season full throttle. Today, the big one, of course, is Reliance, post-market hours. A couple of other interesting names as well. HCL Tech, of course, is coming on the large cap space. There's Angel One, Dr. Lal, Gopal Snacks. Plenty of interesting mid caps also to keep our eye on. Promises to be a busy week and a busy Monday.
Well, that's right. Let's start off with a couple of global cues that we have for us. The dollar index continues to remain rather strong, and that's holding closer to around 103 odd. You would like it to cool down a little bit from those levels because just a couple of weeks or so ago, it was closer to around the 100 odd mark, currently holding at around 103. The good news, though, is that Brent crude prices, after dancing away to around 80, it's cooled off a little bit. So those are the key global cues. Now, in terms of positioning, the FIs last week, they did a big U-turn. At the start of the week, they were net long. By the end of the week, they were net short. And you have some shorts in the system. And as I always say, shorts in the system is not a bad thing because if they get the timing wrong, you're going to be in for a bit of a bounce. Client positioning, they were mildly net long. They build on the long position. So you have close to around 190,000 contracts on the long side on that front. Moving to the options data, I'm pulling up two strikes. The 25,000 call with the premium has come down to around 120 rupees. And on the downside, you have the 24,700 put. Well, out there, the premium is holding at around 50 rupees. So going by the options data, going by the highs as well as the lows that we saw last week, we're in this broad 550 to 600 point band. On the downside, you want this level to get protected, the 24,600 odd mark. that's where the 20-week moving average as well comes in, closer to around 24,500 odd. And on the upside, we have been seeing, the 25,250, 25,300 mark. That seems to be a bit of a near-term resistance as well. Reliance Industries, that's going to be the key element to track, from tomorrow onwards. Because getting into these numbers, the stock is quite weak, close to 7% lower. So if there is any kind of positive surprise, I think the street will latch onto it. It appears with this sort of a decline and this sort of underperformance, the bad news could be in the price. So we'll see how that goes. The other one is the Nifty Bank. It's been showing those good starts. Intraday moves to around 51,500, 51,600, 51,700. But it's unable to hold above those levels. So I think the Nifty Bank needs to decisively get past that 51,500 odd mark and see some follow-through buying from there. That's the crucial mark that we're looking at on the Nifty Bank as well. Well, stocks that I'm tracking, Nalco is one stock that I'll be looking at. It moved with very, very good momentum in Friday's trading session. And we had the management who spoke to us and they made a couple of key points out there. Remember, Nalco is a direct beneficiary of alumina prices. And they said that they're expecting alumina prices to hold at around $600 per ton. That's close to around 24-25% of aluminium prices. So that's a positive because, otherwise normally it's in that range of 15 to 16% of aluminium prices. And the other factor is they said that alumina global deficit is around 1 million tons. And there's only one company that directly benefits, that's Nalco. And the stock moved quite well as well. So I'll keep an eye out on Nalco from here on. It's got the momentum with it. The other one is DMart. As you all mentioned, the numbers were disappointing. The stock trades at 70, 80 times multiples. But the stock has already seen a sharp correction. Just in the last 1 month, it's down 12%. How much of the bad news is in the price? So when it starts off in the red today, let's see if the dip gets bought into.
Okay, fair point. And absolutely, Avenue is going to be the stock in focus as we start off today's action. Let's kick it off then with the equity call this morning. Chetan Sheth of Nomura says, while Saturday's closely watched China Ministry of Finance press conference left out details on the size of the fiscal stimulus, this may imply some near-term volatility as markets reopen today. He thinks overall the MOF event should not deter recent positive momentum in China stocks, as investors will likely now focus on the next major event, which is the NPC, which will likely keep investors' expectations alive of a sizable fiscal stimulus ahead. He says, should there be an even larger than expected incremental fiscal stimulus lasting multiple years, should that be announced in the weeks ahead, there is a possibility of an overshoot of markets beyond even our bull case targets. So Chetan is keeping the China call alive, saying wait and watch, markets could get what they want or more.
Okay, another one, right? Lots of views are coming in. This is Jing Liu of HSBC who says that there is no big fiscal number yet, although supportive measures for local government debt and property beat expectations. She says that policy pivot still looks like it is here to stay. She goes on to add they are reiterating their equity index targets of near 18 to 21% upside, albeit mindful of emerging risks. She adds, bonds are likely to trade range with a steepening bias, while the renminbi may be challenged by external factors until the next event.